Look at this huge gap down on US30 Index. In this video, I will teach you a simple strategy to trade it profitably. You will learn why gaps occur, when and how to trade them profitably, and much more. Like this video, subscribe to my YouTube channel and get a complete plan for gap trading indexes. This gap down on US30 Index is called gap down opening. It formed immediately after the market opened after the weekend. Such gaps form when some significant news and events happen when the market is closed. These gaps are aimed to price in and reassess a fair value of the market, taking into consideration the impact of this news. In our case, this gap down was formed after Trump announced this weekend that he will impose sanctions on NATO if Denmark does not let the US take the possession of Greenland. The good news is that most of the time the market makers, the institutions that create these gaps, will overestimate the real impact of such news, and the gaps will be filled shortly, meaning that the price will return to a gap opening level. This market pattern always provides a lot of profitable opportunities in indexes trading. You will need just one important confirmation before you open the trade. As you can see, after this gap was formed, the market dropped significantly lower. It happens because after a formation of the gap, the market will always seek for liquidity. After the formation of a gap down, the market will always look for a liquidity demand zone to balance market supply and demand. And after formation of a gap up, the market will look for a liquidity supply zone. So if you spot a gap and you want to trade it, make sure that you identify liquidity zones and you patiently wait for a test of a liquidity zone before you open the trade. You can see that in our case, US30 successfully reached a significant liquidity demand zone after formation of this gap down opening. After reaching a liquidity zone, the market finds a balance and equilibrium and a fair value. Supply and demand find balance, and because of that, the market starts coiling and ranging in sideways price action like we see here. You can see how perfectly the market respects a new supply zone right here and our demand zone. After the market finds the equilibrium, the market participants will wait for fresh news to come. It will help them to understand if this sudden change in the market price caused by a formation of this gap was reasonable or not. That will be a critical moment because the news can become even worse and the market may easily continue going way lower. In order to confirm that the market will fill our gap down opening, we will simply need to wait for a breakout of this liquidity supply zone, and we will need to strictly wait for a candle close above that. It will signify that buyers took control and that the market makers overestimated the impact of the news. And here's our strategy and plan to trade this gap down opening. We are waiting for a breakout and the candle close above this supply zone. After that, we will buy after a pullback, and our entry will be based on the highest candle close level within this supply zone, so we will set our buy limit order on that level. Our stop loss will lie below the lows that the price reached after formation of a gap down opening, and our take profit will be based on the gap opening level, and I suggest placing our take profit a bit below that to increase the accuracy of our setup. What newbie traders do wrong in indexes trading, they open the trade immediately after they see a gap. To trade it profitably, you will always need to execute a liquidity analysis. Supply and demand zones will help you understand where the market will likely stop after formation of the gap, and the breakout of a liquidity zone will be your perfect confirmation to open the trade. This strategy will work perfectly on US30, US100, US500 indexes, and of course it will work on many other major indexes too. Let me know traders in the comment section if you have any questions. Learn how to trade in my trading academy. For more info, check the link in the description below. Also traders, please watch my other videos.